this is you right now. And what you do is you find an entry strategy. And what you do after finding that entry strategy is you deem it as the treasure that you just found. You watched that one SMC video and you thought, you know what, this could be the thing that causes my profitability, and you started using it. Now, as you start using it, you're still unprofitable. So what you do is you say, you know what, I'm going to follow a process of trial and error. So what I'm going to do is, this strategy doesn't work, I'm going to try another one. And then I'm going to try another one. And I'm going to test all those strategies. And eventually, I will land on the strategy that works. This is the majority of you. This is how you think about trading. You will just try out different trading strategies until you find the one that works. Right here, through a process of trial and error. However, what if I told you that there is someone using that strategy that is profitable? There is someone who is using that strategy that is profitable. That strategy who is profitable. That strategy profitable, 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 profitable. And therefore, what determines profitability? So all of those things that you are saying no to, no, 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 there is someone using them, and there is someone who is funded, and there is someone who is making a lot of money using the thing that you said no to. That strategy that you just threw in the garbage, someone else is using it, and he is making a lot of money with it. And throughout my trading career, I noticed that any trading strategy can be profitable if you use 4 specific elements that I am going to teach you in that video. So, long story short, this is what happens here. Any entry strategy that you find, there is 4 elements that, if manipulated correctly and if used correctly with that specific entry strategy, will turn that strategy from unprofitable to profitable. Now, what are those 4 elements? I'm going to tell you. Those 4 elements are not something that is new, that you haven't heard about before, but you just don't know how to use them. In all honesty, you just use them as they were taught to you. You don't know how to manipulate them. You don't know how to use them properly regarding any strategy that you use. And those 4 elements are, let's just cut to the chase here. The 4 elements are, first of all, when do you trail your SL to BE? When SL to BE. 2, when partials. When do you take partials, or where do you take partials actually? 3, easy. Where do you place your TP? 4, where do you place your SL? Let me tell you something. There is a combination of those 4 elements that work with the trading strategy that you're using right now, and that could turn your trading strategy to profitability. I'm 100% certain. I have worked with a lot of traders, and I have fixed a lot of strategies, and I will give you an example right now that were just unprofitable and people wanted to change the whole strategy. Then we sit down, we look at the journals, we look at the history, I play with one of those elements, and then boom, the strategy is profitable. So I'm going to teach you, first of all, how to play with those elements, how to find the combination that works for your strategy and can turn it profitable, and how do you determine the problems within your trading strategy. Because here's the mistake that you guys do. The mistake that you guys do is you place your SL where you've been told to place your SL. You place your TP where you've been told to place your TP. From the trader, let's say, that you are learning from on YouTube, if you see him use a 1-to-3 risk to reward ratio, then you use a 1-to-3 risk to reward ratio. If you see him take partials at 1-to-1, then you take partials at 1-to-1. However, who told you partials at 1-to-1 is the most convenient to your strategy? What if there was another partial area that if you switched your partial area from here into here, you would turn from unprofitable to profitable? That is something that can happen. Let me give you a small example. A few days ago, one of the traders that I work with came to me for an auditing session. Okay, in that auditing session, what we do usually is we look at the journal and we determine what is the mistakes that a trader could be doing, or how we could increase the profitability of that trader so we generate more profits in general. And that specific trader was using a 1-to-1 risk to reward ratio strategy. Okay, very simple strategy. He would enter right here, exit right there. And as I clicked on every screenshot for every trader, so one thing that I tell them to do is to take the screenshots at least a few hours after the trade has ended. And therefore I realized that for the majority of his trades, what ended up happening, for the majority of his winning trades, what ended up happening is the market just simply continued moving up after his TP. And of course, for some of his trades, the market just hit TP and then came back to his SL. And therefore, the first thought that I had, I told him, I was like, what if we increase your TP from 1 to 1 to 1 to 2? What happens then? And the first thing he said is, he said, well, then all of those trades that go to 1 to 1 and come back to SL, all of those trades will become losses now. Unprofitable trades. Beforehand, he used to take profits here, so they would have been profitable trades. But right now, since they come back to the SL and he's placing his TP here, those would become unprofitable trade and losses. And I was like, but you would double your profits on every other trade where the market actually went to 1 to 2 risk to reward ratio. So let's measure it. So the effects are simple. For some of the trades, so inside the wins right here, for some of the trades, we are going to double the profits. When we move the TP from 1 to 1 to 1 to 2, we are going to double the profits. And for some other trades, we are going to turn them, unfortunately, from profitable to losses. Okay? And then we sat down and we measured that. We said, okay, so let's say you had this batch of, let me delete this. So let's say, for example, we looked at this portfolio and this is what we've seen. 1 win, 2 win, 3 wins, 4 wins, and 1 loss. Okay, beforehand, each and every one of those wins were 1R, 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 and the loss was, of course, minus 1R. Okay, so the total of those trades would have been 1, 2, 3, 4, and then minus 1, so 3R. Plus 3R for this group of trades. I was like, okay, let's move the TP from 1R to 2R. What happens then? Those first 3 trades, let's say, they ran to 1 to 4 risk to reward ratio, let's say. And this trade right here only ran to 1 to 1 and then came back to his stop loss. So this trade turns into a 2R trade. This turns into a 2R trade. This turns into a 2R trade. This one right here turns into a minus 1R. So we turn this from profitable to loss. And this one right here stays minus 1R. And the total result of that would be 2, 4, 6, 5, 4. So plus 4R. So only for this 4 trades right here, 1, 2, 3, 4, 5 trades right here, his profitability increased by 1 full R by just increasing his TP to 2R. And therefore, by just simply changing the TP, that could be the difference for some of you guys between unprofitability and profitability, especially for those of you guys who are hovering around break even. Let's say if I just executed that for your journals, let's say if you had, let's say, the same problem and you were that trader that sat down with me, then that difference of plus 1R, you would have went from a break-even trader to a profitable trader just by playing with your TP. Now, I'm going to teach you how to play with those metrics. And what we're going to do is I'm going to also teach you how to identify the problems, because here's the thing. For that trader, if I changed his SL, let's say, that wouldn't have been the solution. If I changed his partials area, then that wouldn't have been the solution. If I changed anything but the TP, I wouldn't have gotten results. But because I noticed that the TP needs to be changed, this is why I got the results. So number one, how do you identify the problems? Identify the problems. Problems, okay. And number two, how do you fix them? Do you fix them? And I'm going to make this simple, sweet, and short for you guys. So how do you identify the problems? You go to your charts, you go to your journal. So we have 4 elements, we said, okay? So one of those elements needs to be changed. How do we decide what element needs to be changed? That's number one. And then how do we change it? Those are the 2 questions. So how do we know what element needs to be changed? If I go to my charts right now and I just load up a trade, and what I see is I see a trade that simply went to my stop loss, hit my stop loss, and then went to my TP. Where's the problem here? The problem here is simple. It's my stop loss. Okay? So my stop loss needs to be changed. Now, of course, I can't make a decision just based of one trade. However, the problem with that specific trade is SL placement. So in my journal, beside that loss, I will write SL placement. That's it. And then I'll see how many times this is happening. But this is the problem with that trade. Now for another trade, let's take another trade here. The market ran in my direction, came back to my SL. Okay, and let's say this is above 1-to-1 risk to reward ratio. So the market ran in my direction for a bit, then came back and hit my SL. Where's the problem here? The problem is with my partials. Because here's the thing. If I had taken 50% partials right there, that trade wouldn't have been a losing trade. That would have been a BE trade because I had taken partials here and protected my capital. So therefore, inside my journal, I'll write partials problem. So element number 2. And then I would go ahead and see how many times this is happening. Now, of course, for the third scenario right here, I already explained it to you guys. If the market simply goes and absolutely demolishes my TP, now this is something that you need to do in addition. What I do is I measure how much the trades run after I close them. So for you, when you close the trade, you're like, okay, I'm done. Like this is done, I entered that trade, I went out, I'm done. For me, I measure how much the trade runs after it's closed and I record that. So I'm like, okay, this trade, I closed it at 1-to-1. However, it ran into 1-to-10, let's say. And therefore, because it ran to 1-to-10, then this is, I wouldn't consider it like a problem, let's say, but this is, could be a TP optimization. Okay, I'll record the number, I'll write 1-to-10. Like in the journal, I'll just write, okay, 1-to-10, this ran to 1-to-10. And I will record it for every single trade, and I'll see how many times is my TP actually skipped. Now, that leaves us with the last element, which is where do you trail your SL? When should you trail it to BE? And that I will discuss by the end of the video. However, right now, let's get into how do you fix the 3 problems that I just told you right now. The first step that you're going to do, okay, so let's go. I'm going to give you a step-by-step approach, okay? So the first step that you're going to do right here is go to your journal, okay? Go to your journal. Beside every single trade, so look at every single trade that you have taken and just write down what that problem is. So if that trade, for example, hit your SL and then ran to your TP, write SL placement. Okay, so for every single entry in your journal, just write what the problem is. That trade ran in your direction, more than 1-to-1 risk to reward ratio, and then came back to your stop loss. Let's say this is a partial problem. Now this right here, for example, is a win, but a win that just demolished your TP area. Then just write TP optimization. And for this trade right here, so first of all, let's go one step backwards. For this partial problem right here, you're going to write down how much your trade actually ran before it came back to your SL. So you're going to write, for example, 1-to-2 or 1-to-3, depending on how much your trade ran before it came back to your SL. For the TP optimization, you're going to write down the same thing. How much did the market run after demolishing your TP? For example, the market ran 1-to-10. I took profits at 1-to-2 risk to reward ratio, but the market ran to 1-to-10. So you're going to record those numbers. Now for some of the trades, let's be real here, for some of the trades, it's going to be neither of those 3 problems. For example, if you have a trade that simply ran to your TP, hit it, and then came back to your SL, there is no problem for that trade. That trade was executed perfectly. So you will write down just like TP, okay, you know, just, or you can just not write anything, okay? We don't care about those for now. I will teach you how to handle those later, okay? So for now, and of course there's some trades that you will take, let's say, right here, that simply you would take an entry and then the market will just come back onto your stop loss. No push in your direction, no SL then TP, just simply demolish your stop loss down and keep going down infinitely. This is a bias problem right here. We will also discuss it later on. But simply just write SL. This is not the goal of that video. The goal of the video is to fix what we can fix, and let's leave those for another video, okay? So right here, for the majority of your trades, there's going to be really very obvious problems. Either the SL placement or the partial problem or the TP optimization in that case. So this is step number one. Step number two, let's delete that. Step number two, we are going to start with the thing that is happening the majority of the times. So start with whatever is happening the majority of the times, okay? So let's say for the majority of your losses, you have written partial problem. So you have a partial problem, okay? That's the majority of your problems there. That's the majority of your trades. The majority of your trades are running in a certain direction, let's say, and then coming back to your stop loss. So this is a partial problem. You should decide where you should place your partials. And therefore, what you're going to do is you're going to take all those trades and you're going to see how far are they running. For example, this trade right here, let's say you've taken an entry right there and the market ran into this area right here. Your TP was right there and then came back to your stop loss. This is a 1 to 2. Let's say you've written right here 1 to 2. And let's say this happens the majority of the times. For some trades, it's 1 to 1. For some trades, it runs into 1 to 2.5. You're going to see where the majority of the times your trades run, and you're going to test different levels. Everything is about testing. So you're going to say, okay, what if I take partials here? Then what happens to my portfolio in general? And what happens to your portfolio is that for the trades that were pure wins, let's say you got 1 to 3R for that trade, because now you're taking partials right here, that 1 to 3R changes. You are no longer booking 3 risk to reward ratio. If you risk 0.5% here, that is no longer a 1.5% trade. This is now, because you've taken 50% of your position off at 1 to 1 risk to reward ratio, this now becomes a 1 to 2 trade. Okay, so you start making 1% for that trade as opposed to 1.5%, because of course when you take partials, it means you've taken profits before hitting your TP, a bit of them, and therefore the general profits, the total profits, they decrease. And therefore, for your wins, they will all decrease by 0.5%. Okay, obviously. And now for some of your losses, you are going to take partials at 1 to 1, which means some of your losses are going to be saved. So for some of your losses, you are going to go from minus 0.5% to 0%. So you are gaining plus 0.5% on your losses, and you are losing minus 0.5% on your wins. And therefore, what you're going to determine is, for all my wins, I will lose minus 0.5%. Okay, so let's say you had 10 wins for the last 100 trades. That means that you will be sacrificing 5%. And for your losses, let's say for the losses that ran in your direction, then came back to your SL, you're going to save 0.5%. So let's say that ended up happening for 20 trades. Then what that means that if you implement this partial profit strategy right here, you will end up gaining 10% on your portfolio. So 10% minus the 5% that you will be sacrificing on your wins, you will be gaining 5% on your portfolio. I hope that makes sense, and I hope that's not too much. And if that's too much, let me know in the comments. I'll just create another video explaining this math in details right here. So after you determine, so step one, you go to your journal, you just highlight what the problem might be. Step number two, what you do is, after you highlight what the problem might be, is you isolate it basically, and you measure, okay, what can I do? Let me test. What happens if I take partials at 1 to 1? How many wins do I sacrifice, or how much from my wins do I sacrifice? And how many losses do I end up saving and turning into BE? And therefore, after you determine that, you can compare those numbers together and see whether in total on your portfolio right here, you will gain or you will lose. And if the profit right here is a net positive, you will just gain 5% on your portfolio. If you implement this partial strategy, then congratulations, that 5% could be the thing that turns you from unprofitable to profitable. So what is the problem? Isolate it. See what happens to your wins and what happens to your losses once you deal with it. For example, another example, the SL placement. if you figure that for the majority of your trades, the market is hitting your SL and then moving towards your TP. That means that, okay, let's try to double our stop loss. So instead of placing my stop loss right here, my pen is on the ground, I'm going to place my stop loss right there. And if I place my stop loss right there, I save all the losses that just hit my stop loss and went to TP. But what I do as well is I sacrifice a lot from my wins, because if I double my stop loss size right here and I have the same target, that trade turns from a 1-to-3 risk to reward ratio trade to a 1-to-1.5 risk to reward ratio trade. So I just sacrifice 1.5 risk to reward ratio per win if I double my SL size. But I just saved all the losses that just hit my stop loss and went to my TP. And therefore, by saving all those losses, you have to figure it out. You have to go and you have to say, okay, I saved those losses, but I sacrificed some of my profits. And therefore, those are my sacrificed profits. For example, I would have sacrificed 3% in profits, let's say, if I double my stop loss size, but I would have saved 6% in losses. Then it means, of course, you should do it. Of course, you should double your stop loss size. Now, there is scenarios where there is a problem, but you should do nothing about it. It's as simple as that. For example, if this math right here was negative, it means that, yes, I have a partial problem. The market is running in my direction and coming back, but I am better off not taking partials than I am better off taking partials. I would be better not taking partials if that math right here was negative, as opposed to plus 5%. So if I would have, the sacrifices that I did for my wins were a lot bigger than the losses that I saved, then of course it doesn't make sense for me to take partials. And therefore you don't want to approach the market in a sense of, okay, I should take partials here because that trader said so. No, is that the best case for your trading? Because we all have preconceived notions. For example, partials protect your capital. Trailing your SL protects your capital. Having a tight stop loss will give you the highest risk to reward ratio and therefore will give you the most profits. This is a preconceived notion that you have, I don't. So therefore, we don't want to come to the markets with those preconceived notions. Partials protect capital. No, what if partials are causing you to lose more? Because the math is negative. And by you taking partials, you are missing out on some profits, and that is causing you to lose more than you win if that math is negative again. And therefore, you need to verify it for your case. So number 4, when do I trail my stop loss to be? This is something that I also optimize a lot. So what do I not want? Let's think about it invertedly. Let's invert the question. And by the way, just like a side note, inverting the questions, the majority of the times, it leads to a very newer perspective, and that would make you solve problems a lot faster. So if there's something that you're asking yourself that you can't figure the solution, for example, how do I become a good trader? Okay, instead of asking myself, how do I become a good trader? You could ask yourself, how do I become the shittiest trader ever? And then the answers that you would have, okay, how do I become the shittiest trader ever? Okay, I risk too much, so I blow my account. That's number 1. I revenge trade. I overtrade. I get emotional. I get really angry and frustrated. I FOMO into trades. I trade the most high impact news for the most profits, and therefore my stop loss could be skipped and I could lose the majority of my account. So if I ask myself, how do I become, I never journal, I never backtest. Okay, if I ask myself, how do I become the shittiest trader to ever exist? Then I get those answers, and what I could do is the exact opposite. Then I have the answer to how do I become a good trader. So the majority of the times, if you don't have an answer to your question, just invert it and it becomes much easier to understand. This is just a side note right here. So SL to BE, okay? What I don't want happening is I don't want to trail my stop loss to break even point, and then what ends up happening is the market runs in my direction, the market comes back to my BE point, let's say, and then the market runs to my TP. Okay, and for the majority of traders, you learn, okay, trail your SL to BE right here, and then you trail it. Then the market comes back to your BE point, boom, TP. A trailed SL is supposed to protect your capital, not make you miss out on profits. And therefore, if a trailed SL is making you miss out on profits, then it's not doing the goal it's supposed to do, and therefore your trailed SL is not serving your purposes. And therefore, what I want to do basically is I want to go to all of my trades. This is number one. There's two ways of deciding when I trail my SL. Number one, it's a price action methodology. And number two, it's a risk reward methodology. So I'll start with number two because it's easier. Number two, a risk reward methodology. The market runs in my direction. What I want to make sure is at what point after the market reaches, if it were ever to come back to my entry point, it will almost, let's say 80% of the times, come back and hit my SL. Okay, if I can get that point, I go to the majority of my trades and I measure it and I say, okay, at what point in the charts that if the market were to come back to my entry, it's most probably it's going to be an SL trade. And for those trades, I'm going to trail my SL to BE. So if, let's say, I go to my charts and I just look at the majority of my trades, and what I see is I see that the market can simply do this. No problem. That it does this the majority of the times. And therefore, the majority of the times is if I come to the charts and I just trail my SL from here into here, all those trades that just ran into here and then came back to my BE point would be BE trades as opposed to profitable trades. Because when the market is coming back to my entry point right here, it's coming back as a retest, not as a reversal. And therefore, I'm being pushed out of the markets on a retest, not on a reversal. But here's the thing, I also noticed that for the majority of the trades that I have, the market doesn't come back from here into my BE point. And if the market ever does come back from here into my BE point, there's a high chance that it's going to hit my SL, because for the majority of trades that actually run here, then come back here, the majority of them just continue going down. And therefore, you just also have to go to your journal and look at your trades that you have lost in that case. And for the trades that you have lost, I want you to just measure, and you also want, you need to look at the trades that you also want. And you need to measure, okay, where is the area that when the market comes back from, the majority of the times, it's just going to my stop loss. Okay, and where is the area for that same area? Let's say you go to your losses right here, and you're like, you know what? All those losses ran to, let's say, 1 to 2.5 maximum, and then came back to my SL. Ran to 1 to 2.5 or 1 to 1, let's say 1 to 1.5, 1 to 1 again, 1 to 1 again. But you go to your wins and you see that also your wins ran to 1 to 1, came back to your BE point, then went to your TP. And therefore, by saving those losses, you would be sacrificing a full profitable trade, not just partialing it. You are sacrificing a full profitable trade just because you want to save this loss. So if your trade, if your win is 1 to 3 risk to reward ratio, you are sacrificing a 1 to 3 risk to a 3R trade, which could be 1.5%, for a 0.5% loss. Just to save 0.5% of your account. You don't want to do that. What you want to do is you want to go also to your wins and see where the market normally goes, comes back for a retest, and then continues going up. So just to make this, I'm speaking a lot, just to make it a long story short, what I want to do is I want to look at my trades and I want to verify the area in which after the market reaches and it comes back, if it ever comes back to my BE point, the majority of the times it's going to continue going down. So there is an area, to make it simple, there is an area for your trade to which when the market stops and comes back to your entry, 80% of the times, 70%, let's say 60% of the times, 65, whatever the number might be, it will continue going to your SL. And from that area, if the market ever reaches that area again, this is where you want to trail your SL to BE. This is from a risk to reward ratio perspective. Now, this is not the perspective that I use. The perspective that I use is a price perspective, price action. So for me personally, I look at all my losses and I just verify the price action that happens inside here. So what happened inside here for the market to just absolutely impulse down? And I realized, for example, I'll give you one example. I realized that if I am in a trade and a news happen while I'm in a trade, so I would never take a trade when news happen. Like if right now I need to take a trade and I know that in 5 minutes news are going to be announced, I wouldn't take a trade. But let's say I'm already in a trade for 2 days. Let's say I'm swing trading and I'm already in a trade for 2 days and the news are going to be announced right now. Then what I do is I trail my SL to BE. Why? Because if the market decides to come back from here after news are announced, and the market decides to melt down into my entry point, the majority of the times it's going to continue going down to my SL. And therefore I decided, you know what, when news are announced, I trail my SL to BE. So that's number one. Number two is a specific price action. Okay, so right here, let's say the market went up. We had these double tops form right here. Those double tops were a grab. The market is starting to reverse right here. When this price action happens right there, I'm like, you know what? We are liquidating to the upside. I'm not talking, by the way, about this specific price action. I'm just giving an example. When the market does that, when this price action happens and the market comes back to my entry, the majority of the times it's going to come back to my SL right here. So I just check on the price action and I wait for certain price action to happen for me to trail my SL to BE. So there's no specific zone or risk to reward ratio where I trail my SL to BE. I don't trail my SL to BE for all trades, for example, because sometimes this price action might never happen. And therefore the market could simply just go to my TP and that price action could never happen. And therefore I will never trail my SL to BE on those trades. So I will only trail my SL to BE if a specific price action happens where I see that for the majority of my trades, when that specific price action happened and the market returned to my entry, it continued going down to my SL. And after I determined that, I decided, you know what, this is the price action in which I want to trail my SL to BE whenever it happens. Now, I also want to make something really clear. I am not glued to my charts. I live my life. And therefore, I take a trade in the morning and I leave. So how do I know that that specific price action happened? I don't. I just want to make it clear because I know this is fucking confusing right now. After all this speech, I said I don't. But what ends up happening is I take a trade, the market runs, let's say, and this price action ends up happening. I'm trading, I'm either day trading or swing trading, let's say. So this price action right here might form for hours and hours and hours and hours. So let's say I traded today at 9 AM London time. I could come back to the charts next day at 9 AM London time. And when I come back next day at 9 AM, I'll see that that price action already happened and the market is moving in my direction, in the opposite direction, I mean. So what I do is I trail my SL to BE. Now the question becomes, Roy, what if the price action happens in the middle of your trade and you don't notice it because you're away and the market comes back to your SL? And that could have been a BE trade, but now it's an SL trade because that price action happened when you were away. I don't give a fuck. I'll let it happen. I'll lose, no problem. If I see the charts and I see that price action, I trail my SL to BE. If I don't, then I don't. I couldn't care less. So this is what ends up happening. Sometimes I check on the charts like 2-3 times per day, let's say, just quickly on my phone. And therefore, if I see that that price action happened right there, I'll just simply trail my SL to BE. But I'm not glued to the charts. That's a very important point because this will cause more harm. Like for you to save one trade, like trail your SL to BE, you're glued to the charts all day. That will cause frustration. That will cause boredom from the charts. That will cause a lot of negative emotions. And all those negative emotions will cause you to fuck up even more. So that SL trade that you would have gotten would double and triple and quadruple because of all the emotions that you felt while you were glued to the charts all day waiting for that price action to happen. And because of that, you end up doing stupid shit in front of the charts that cause you to lose more. So for me, I am willing to sacrifice that trade if I don't see the price action. I am willing to sacrifice that trade and for it to come back to my SL and hit it, but I don't want to be a slave to the charts. I don't want to be glued to the charts all day. And therefore, I'll just be okay with that trade running to my SL for the benefit of not being glued to the charts and doing something that is potentially more stupid that will cause me even more losses than this one trade. And therefore, I just not glued to the charts. But when I say I check on the charts sometimes, multiple times throughout the day, it's just like a quick phone. Let's say you're taking a shit, you check on your phone, or I'm at the gym, I check on my phone. That's it. Or maybe I jump on my monitor just real quick. Let's say I'm signing some documents, let's say, or printing some papers, and I will just open TradingView and see what happened. That's it, basically. And therefore, conclusion okay? Every trading strategy, those 4 elements right here, played with, will turn that strategy into profitable. Where you place your SL could play a huge role in whether you're profitable or not. I've seen a lot of order block traders who, like, let's say this is an order block right here, this is a candlestick, they draw it out, the market comes back to this area, they take a trade right here, they place an SL right here. I've seen those traders fail. And therefore, I've seen also the same traders who trade the same strategies, who are order block traders, just take their stop losses and place it one low below, let's say, this low, and give the market room to breathe. So give the market the room to just come down and tackle one more low before it goes up. And those traders are more profitable than those just by simply removing their stop loss and putting it all the way down here. And therefore, just simply where you place your SL, where you place your TP, where you take partials, when you trail your stop loss, plays a huge role in making every single strategy profitable. And there is a specific combination of things that work for every strategy. For example, for that strategy, you should place your SL below one low. For that second strategy, if you just use the right SL placement, which is maybe not below one low, maybe for this strategy, you have to have a very tight stop loss. So maybe you shouldn't place it below one low. And therefore, every strategy has its own combination of stop losses, TPs, partials, and when you trail your stop loss, that would 100% make it profitable. Afterend Fibonacci traders profitable who are using strategies that I've never traded, trendline traders, break and retest, support and resistance, SMC. I don't need to know what your strategy is. That's the point. I can just go look at what's happening within your trades, and whatever entry strategy you're using, I could tell you, hey, whatever entry strategy you're using, you should start taking partials right there, because I've seen in your journal that the majority of your trades, for example, are running to 1 to 2, then coming back to your stop loss. And therefore, I could fix a strategy even without knowing what that entry strategy is, just by playing with those 4 elements. And that's why don't waste all of your trading career looking for your perfect strategy. There is no perfect strategy. Play with those 4 elements, and whatever strategy you're using right now will become profitable.